Once more again, welcome to Finance Hub with Dr. Joseph Eyakimoa. I'm a financial advisor, an investment banker, a chartered accountant, and economist with over 20 years, about 20 years experience in the financial industry in Nigeria. Welcome to Finance Hub. Please, you're encouraged to share this particular session with your friends, with your associates, because we want businesses to grow. There's a knowledge apathy, the scarcity of knowledge in this area. And one of our joy is that we are pushing this knowledge for free, even when people pay for it substantially. So feel free to share it, share with your friends, your business associates, your colleagues. Let's create a business hub, a finance hub, where knowledge will be disseminated to every entrepreneur in our environment and across national bodies. You are welcome. Today we are looking at business valuation. What breaks my heart the most when I go to certain environment where thriving businesses have existed before now, and they tell you the business is no more. And what are the reasons? Maybe the owner of the business died or is out of businesses. And do you actually know that instead of shutting down your business, you can actually sell your business? And if you want to sell your business, you have to value your business. And I can tell you for free, even the name of your business has a value. The commodities you are selling had a value. So why do you need to value your business? There are times like if you have followed our series up to this business valuation, we've talked about your startup, your expansion, so your growth process. So maybe when you started, your business was at 1 naira per share. After 5 years, if you have actually contributed value and grow in leaps and sizes, that business will not be 1 naira again. Business could have grown to 5 naira per share, could have grown to 10 naira per share. But how would you know if you don't value this business? And that is a rule of the professionals, the finance core. So what is business valuation? It is the process of determining the worth of your business as of today. So this business I started 10 years ago, 5 years ago, what is the value today? It takes a lot of analysis to do that, but I think it's something you want to, each time you want to bring in a new investor, you should be able to value your business. In fact, on your own, just the way people value properties, you actually should value your business. And what are the reasons for valuing our business? One, when you want to raise new capital, like I said, maybe when you started, the shares are issued at 1 naira per share based on your CAC registration. But you have done 5 years, you've increased the market size, you've made more profit. So 5 years later, your business could have grown to 10 naira. So raising new capital and bringing investors, you need to value your business. You also need to value your business when you are merging with another company. So you need to know, what am I bringing to the table? Where is part B bringing to the table? So you also value your business when you are merging, when you want to sell shares, even when you want to leave the business, you want to sell your holdings to another person. I'm retiring now, I don't want to continue again, let my colleagues continue, and you sell your business. You need to, what is the value of the business and if they want to exit? So at exit strategy, you need to value your business. How to prepare for your valuation? Like I often say, always keep record of your business. Keep your record, get an accountant to prepare your financial statement. So that it becomes easier when you want to do the valuation of the business. Then you also look at this growth strategy and competitive advantage. You must have a document for your growth strategy, which I also discussed earlier, and then prepare your financial forecast. There are different models of value your business, but the one that is widely accepted globally is the discounted cash flow model. So you do the business forecast, you discount the cash flows, and then run your valuation. There are the PE ratio model. If the company is more, have a lot of assets, then the asset valuation can be the best model for the business valuation. What are the factors that actually contribute to the success of your business valuation? Your profitability, your revenue, your cash flow, and the quality of your management. In fact, the quality of your management is very critical. Because even if you have everything right and the management is not right, then you can run the business down. I listened to Warren Buffett so many years ago as a young investment banker, and he said one thing that I've never forgotten. He said, when you want to invest in a company, and the company have good financials, the company have a good market share, the company have good prospect, the profit, the numbers are good. But if you don't like any member of the management, you can't trust him in terms of character, in terms of competence, in terms of reputation, don't invest your money. So the quality of the management of the business is critical to the value of the business. Then goodwill, also value goodwill. Because sometimes people just say, it's not a business name, it's not just this my business. No, sir. There is a reason why somebody leave shop A to come and buy same product in your shop. You have earned a goodwill, and there's a monetary value attached to that goodwill. So as you scale up your business, if you need to merge, so instead of shutting down, you need to merge. If you are tired of the business, look for someone to buy it from you and value it. Thank you for this series. See you in the next. Thank you.